Are you aware of the latest changes in the MAT provisions of the Income Tax Act 2025? If not, then this is the one update you definitely don't want to miss. The Finance Act 2026 introduced three major changes in the minimum alternate tax provisions, or you can say MAT provisions, which are effective from tax year 2027. Beginning with the first update, which is the reduction in the MAT rate. Until the financial year 25-26, tax under the MAT provisions was payable at 15% of the book profits. However, with effect from tax year 26-27, the tax rate under MAT provisions has been reduced from 15% to 14% of the book profits. At first glance, the reduction in the rate looks positive. However, there is an important catch, which brings us to the second change: no fresh MAT credit will be allowed. Under the earlier mechanism, the excess of tax paid under MAT provisions compared to the tax paid under normal provisions was allowed to be carried forward as a MAT credit for the further period of 15 years. However, from financial year tax year 26-27, the tax paid under the MAT shall be considered as a final tax with no creation of fresh MAT credit. Now, the final change relates to the existing brought forward MAT credit. What happens to that? In principle, the existing MAT credit which exists on April 1, 2026 in the case of domestic companies shall not be available for set-off until unless such domestic company opts for the taxation under new tax regime. Additionally, the set-off in such scenario for each year shall be limited to the extent of 25% of the tax liability determined for such year under the new tax regime, while the balance MAT credit shall be carried forward subject to the period constraint of 15 years. So, what should a company do? As these amendments can significantly impact the tax economics for companies with substantial accumulated MAT credit, therefore, as a suggestion, analyze your existing MAT credit balance, expected future tax liability, utilization timeline, and the impact of shifting to new tax regime on your cash flows for better decision making. That's the MAT changes you need to know for tax year 26-27. Follow us for more practical updates and insights. Thank you.